Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 5th of August 2021, and we're publishing our regular morning update where we look at the latest news headlines, economic reports, and precious metal prices. Today, precious metal prices are little changed, but yesterday's ADP employment report was poor, which means tomorrow, if the non-farm payrolls are similar, could act as a tailwind for gold prices, and perhaps help silver, but not be quite so kind as it could be for gold. Will that happen? We'll wait and see. But meanwhile, let's take a look as to what's happening today. Welcome this rather wet and miserable, from a weather point of view, looking morning with low cloud base, no sun in sight, and the heavens crying as I'm another year older. Yes, as of 6 a.m. GMT plus 1, I have reached yet another year. And thank you to everyone wishing me a happy birthday on yesterday's video. It's Thursday, 5th of August 2021, and it's currently 09:01 AM GMT plus 1. And what's happening in the news? Well, we can see that the United Kingdom eases its quarantine rules, opening up travel with France. Investors are ignoring a dangerous crackdown on press freedom. More journalists than ever were in jail last year, and the number killed rose by a third. But perhaps the most important from the British point of view, certainly, but it will have ramifications on the dollar, Bank of England set to take steps towards tightening monetary policy. The possibility exists that borrowing costs could be pushed below zero. What on earth is this about? Let's just have a quick look. The Bank of England may move a step closer to tightening monetary policy, showing a path towards unwinding almost £900 billion, or $1.2 trillion, of government bond purchases, while also opening the possibility that borrowing costs could be pushed below zero. While the two decisions pull in opposite directions, they could prove inextricably linked. They feed into the debate about which policy levers the UK Central Bank will pull first when the time comes to tighten monetary policy. Officials led by Governor Andrew Bailey have signalled that they want interest rates higher than their current level before selling off some of the government bonds they've built up through their quantitative easing programme. And that, quite frankly, is what a traditional banker would suggest. Adopting negative rates as a potential policy tool could allow them to bring forward the moment when they scale back their bulging balance sheet. They could also prepare the ground for bolder action. It makes sense for them to come out and let the market know what their new guidance is sooner rather than later, said John Wraith, head of UK and European rate strategy at UBS Group AG. The simplest thing, he said, would be for the Bank of England to lower the 1.5% threshold for where rates should be before bond sales start, a possibility if there's an acknowledgement that rates may slip into negative territory. Officials are due to announce their latest policy decision on Thursday, which is today. They're expected to keep their stance unchanged at 0.1%, albeit with some dissenting voices calling for an early end to bond purchases. The current QE programme envisages £150 billion of bond purchases this year. Here are the issues guiding the Bank of England's decision. Now, we haven't got time to really read all of this, but it's worth basically just saying much of the conversation in the past few months has been dominated by a spike in inflation, both in the UK and around the world. Consumer price growth rose 2.5% from a year ago in June, the most since 2018. and a half point higher than the Bank of England's target. While Governor Andrew Bailey and the majority of other MPC, that's Monetary Policy Committee members, have repeatedly said that much of the increase is likely to prove temporary, Bank now estimates that inflation will exceed 3% this year. So not quite as temporary as they originally thought. So, are we going to see negative rates? Are we going to see bond buying reduced? Most economists expect the bank to lower the level of interest rates needed to before QE starts to unwind. At the moment, the bank has suggested that rates need to move to 1.5% before they sell bonds, opening the possibility of negative rates might allow the Bank of England to act before rates rise to that level. So wait and see. This is itself a discussion all on its own. We'll know more later today. Also, Europe faces an energy shock after gas and power prices rocket. After lockdowns forced Basil Hamzeh to close his cafe in a trendy Berlin neighbourhood for months, the 53-year-old is confronting a fresh crisis: high energy bills. The cost of natural gas and electricity has surged across Europe, reaching records in some countries as businesses reopen and workers return to the office. In Germany, now where do they get their natural gas from, I wonder? Wholesale power prices have risen more than 60% this year, leaving the owner of the Frau Hönig Cafe in Friedrichshain with no option but to raise prices of everything from cappuccinos to cinnamon rolls. No more cinnamon rolls for me. The higher power prices were a double whammy after our cafe was forced to close for such a long time, doing only takeaways during the pandemic, he said. Now this is the important bit, not cinnamon rolls. Energy prices are rising around the world as the global economy emerges from the pandemic, fueling concerns about inflation because, of course, for many businesses and domestic residents, the cost of warming your house or running a plant is technically disproportionately higher, apart obviously from wages for businesses, than many of the other costs that you incur. In Europe, plans to decarbonise the economy are also playing a part, as utilities pay near record prices to buy the pollution permits they need to keep producing power from fossil fuels. Add to that shortages of natural gas, and the result is supercharged electricity prices, a bill consumers will eventually have to foot. Spain was already forced to cut energy taxes as power prices rose to a record, and the UK is expected to allow utilities to increase bills a second time this year, a move that will be announced Friday and affects 15 million people. And of course, we've seen this happen. We've seen energy prices rise dramatically, just at a time where we're all going to be moving to battery-powered cars, which needs to use electricity to charge them. Do you see a paradox here? Interesting. Let's wait and see what happens. But any potential for inflation to be transitory really is doubtful if this is going to occur. Business news in the UK. Very quickly, Ashley to step down as head of Sports Direct Group. The tycoon is handing power to his future son-in-law. No nepotism there. TikTok tests disappearing video stories feature. Investment giant to pay vaccinated workers $1,000. Asset manager Vanguard will reward staff who get jabbed, but it won't mandate vaccinations. My God, I should have applied for a job before I got my jab and earned $1,000 and then resigned. Quick way to make money overnight. Okay. America. Mexico sues US gun makers over arms trafficking. US sailor charged in USS Bonhomme Blaze identified. US plans vaccine mandate for foreign visitors. And do you notice it is still all about COVID and the Delta variant? US plans vaccine mandate for foreign visitors. Why whales in Alaska have been so happy? Oh dear. COVID crashed Obama's party. Is yours safe? What is Elon Musk's Starship? It's building a vehicle that could transform space travel. All our billionaires seem so desperate to leave the Earth. Well, let's get back down to Earth and have a look. Dollar index, 92.22. Marginally down on the day, but still holding above 92. Energy prices, ironically, the price of crude is going down. Energy prices going up, price of crude going down. Stock markets. Well, yesterday, the Dow took a little bit of a breather, down 300 points, almost 1%. The Nasdaq, though, continuing to rise. Asia Pacific overnight, mixed bag, either up half or down just over half. And in Europe and the UK is down very marginally, and the rest of Europe is marginally up. Economic calendar. Bad news yesterday, really. The ADP employment report coming in at 330,000 against 680 on last month and against expectations of 653. Now, if this follows through with the Non-Farm Payrolls report on Friday, it will just go to show that the economy is not recovering quite as quickly as many thought. And bearing in mind that the Federal Reserve has given a pledge not to restrict its QE programs until we're nearing full employment, this should in one way act as a tailwind for gold prices. For silver, perhaps less so, because again it's suggesting the economy is not robust, so the industrial demand for silver will be less. However, having said that, the services PMIs have done moderately well, marginally above expectations for the market. Services PMI and the ISM is quite well above the expectations at 64.1%. We'll have a look at the jobless claims later today, and we'll see if that supports the ADP employment report. It's difficult because this one's weekly and that one's monthly, but it will be interesting to see how they compare. And then, of course, the big day today is the non-farm payrolls. Now, we have said we will not produce a video on Friday because I'm away. So I will produce 2 on Saturday, our regular update, and I may very well talk about what's happening vis-a-vis employment, the UK bank's announcement, central bank's announcement today, and I'll try and put all that together in a separate video. Let's have a look at gold. How are we faring this morning on gold? Well, let me refresh the page because I pulled this up half an hour ago. Okay, gold, 1,811. Down just 22 cents on the day. On the week, remember, on Friday, it closed at 18.14, so it is down $3 overall. Frankly, very little movement. We were expecting more, and perhaps we'll get that on Friday. We were expecting a bigger divergence between the week's low and the week's high. Going to silver, let me refresh the page again. At silver, we're at, on the 24-hour basis, we're down 26 cents at 25.41. On a week basis, we ended the week at 25.50, so we're down just 6 cents or 7 cents. Look at that spike and then just total collapse back down. Now, we are expecting silver, as we say, not to really perform that well, but maybe gold will get a pickup if the non-farm payrolls is not so great. We shall wait and see. But precious metal prices operating within very tight margins yet again. On the crypto front, over the last 24 hours, Bitcoin are up 2.74, although it's fallen back 1,000 points this morning. And Ethereum up 8%, so that's doing extraordinarily well, but there are technical reasons for that. But look at this, the crypto market has risen now to $1.61 trillion. And some forecasters say before the end of the year, that will be 2 trillion. Thank you very much for watching. That's it for now. I'm off for my 2-day holiday retreat, and I wish you well. And please give us a thumbs up, subscribe, and press the bell sign. So until Saturday, au revoir, auf Wiedersehen, fare you well, have a great day. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.